We've got many economists, one coming this afternoon from Brookings, who says that there is a recession. Are we in a recession now?
We are in a serious slowdown in the economy, which has very significant consequences for the public, and whether it's called a recession or not is of no consequence.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
An absolute bloodbath on Wall Street today. A pan sell-off, panic, fear grips the media, grips retail, grips the marketplace. Everybody started to sell. Guys, we got some key levels to go over on the charts, but analyst after analyst this morning on Bloomberg was coming on and talking about, wow, this almost seems like a design or like a plan. They said that at least a half dozen times this morning, different analysts coming on. They need yields to come down. They need inflation to continue to cool, to get rate cuts to bring yields down even further. Why? Because we have $36 trillion in debt. Now, guys, 2 weeks ago, I told you I thought they were using the Reagan playbook for exactly how this is playing out right now. And remember what Reagan did. He came into office. He had an inflation problem. Paul Volcker jacked up rates to 20%. It caused a recession. However, simultaneously, Reagan deregulated, Reagan cut taxes. You're seeing Trump do all this economic things right up front, jamming it all in the first 8 weeks of his presidency. Why? Because it's more beneficial to both the economy and to obviously the geopolitical space for everything to get weaker here in the beginning of the term, because what happened with Reagan in his reelection? He won a 49-state landslide, massive electoral victory, massive victory and popular vote. He did that because he got all the bad news out front. And hey, look, Trump's in his late 70s. He knows this, okay? His handlers, his economic team know this. So they all are looking at the problem in the marketplace, and they're not really caring what happens with the market right now. But here's a key thing that nobody's going to show you. Lee, throw up that chart. Look at global M2. This is money supply globally. Look how it's spiking. Look at the Bitcoin line going up. It usually lags M2 by 3 months. So this chart I got from Zero Hedge. This does not even include the potential 500 billion more that Germany's going to be adding. So guys, this is a fear. This is a panic move. It is a sell-off. We're going to look at the support levels because I think a big bounce, a big rally is coming. A light at the end of the tunnel, a pot of gold at the end of the rainbow. We're going to look at those levels on the charts. If you enjoy this content, be sure to like and subscribe. Follow me on X at Market Canary. It's in the video description. I'll pin it in the comments. I release a Thursday update video exclusively on X. I put one out last week, so check that out, guys. You want to come trade with us? Definitely check out marketmakers.trade. Hang out in our community or hang out on our website. Fantastic place to be. Lee, let's go ahead and start the show. All right, guys, I want to kick off on fear and greed because we're at 14. How much time is left in trading today? Right now, we've got about 22 minutes left in trading. We're getting that end of the day bounce after a big sell-off, but look at this, extreme fear, 14. Now, we sold off some more, but I want to show you on the charts because I don't think people believe it, but I want to show you what's going to happen in the marketplace just based on history of what always happens in the marketplace, okay? So let's look at the VIXX real quick. We talked about this VIXX level of 22 being prior sell-off levels. We took that out today, got up above 25, coming back down a little bit. This is good, a little bit more of a flush. Let's go ahead and move forward. Let's look at the Dow. The Dow is a leading indicator for the S&P, right? Bitcoin's a leading indicator for the market. The Dow's a leading indicator for the S&P. Dow came down right to its low area, that fractal low around 41,791, and it's spiking back up here. It's almost at 42. It's already gone up a few hundred points now. But keep in mind, everything was down huge today. Like the Dow alone was down at its peak. It was down over 1,000 points. NASDAQ, massive move. Bitcoin fell back to 78. So we're going to go through this. What do I think is going to happen? I'm going to show you this on the S&P. You want to see the Dow come back up. It'd be good. Stay above 42. Keeps you down in this low area right there on Dow futures, right? It's important to stay in your trading range, even if it's at the bottom. Let's look at the S&P because this is what I think is happening. This sell-off that you're getting right now, just look at how steep this is. Steep and uncorrected. Uncorrected meaning no counter trend rally, right? You fell so far 9.65% in S&P futures. Notice the day count, the bar count, 13 bars, 19 days. When else did you do this? People act like this is ancient history. You literally just did this in the summer of last year, in July 2024. You fell 10.5%. 14 bars, 20 days. Do you see this? 14 bars, 20 days, 13 bars, 19 days. And what is our key pivot? This Friday, total lunar eclipse is coming up. The S&P's rebounding some here as well at the end of the day, back up to 56.27 as I'm recording this. But understand, you did this move. So what's the next move? The next move, guys, is a big rally. Why is it a big rally? It's a law of three. If you get a sharp sell-off, you're going to rebound rally. If it makes a lower high, you'll hear people say it's a dead cat bounce, whatever. You're going to get a sharp rally and say, Brendan, that's not going to happen. How big could it really be? Well, look what you did last year. You sold off 10.5%, and then you rallied up 10.73% over the course of 29 days. 21 bars, 29 days. You rallied up 10.73%. And overall, you only came down from that peak there. You came down less than 1% after the rally. There's a big rally that's going to form, guys, once you put in this low. And I think you're going to repeat this same exact pattern. So let me show this to you, okay? I think because you had such a sharp sell-off, I'm not saying that the low is absolutely in, although we got very close to my 786 at 55.66. You came all the way down to 55.71. Now you're back above the 618, right? So it's important to get some upward momentum, but this takes time to bottom, right? Sometimes you get a V-bottom recovery, but oftentimes you get this, like you had over here. Several days, 3 days, 5 days, up and down in a range, right? So you could be getting ready for some of that. But look at this. If we make the same move that we did last summer, you have your wave down. Let's say this is the bottom. We don't know for sure. You're going to come back up. The question is to where, right? And then I think you're going to pull back, right? You're going to get a sharp rally, a pullback. And if you can hold that higher low, it's literally repeating the same setup that you did last summer. And then you're going up from there, okay? Let's get rid of this fib and let's see what this target would be. The exact same W fractal pattern. By the way, my W fractal education is out this week. It'll be on the Discord. It'll be on the website. Last week, I did the ABC pattern. You can check that out at marketmakers.trade if you would like to see it. A lot of good feedback so far. Let's get a fib retracement from the top down to the bottom here. And I didn't intentionally draw that at the 618, but that's exactly what I'm thinking. This is going to rebound up to close to 6,000 in S&P futures, 59.39 if this is a low. Because remember, this measures expansion and contraction ratios. I think you're going to get a big rebound up here, right in these fractal low areas. You'll get a pullback. When you get the pullback, the channels you watch, people on X, they're going to say, see, dead cat bounce, it's going back down. And sure enough, it's going to go back down. Now, the difference is if you take out this low, you have a higher probability of this was the market top, right? It's a higher probability chance. However, If you hold a higher low, just like you did last summer, look at the gains you put on after you held this higher low. You ended up going up another 14%. You rallied for 166 days. I'm not looking for that because, as you guys know, I have my target right up here, right? I have my target up here at 63.22, 64.64. I'm looking for a marginal new all-time high. And then once we have this midpoint, we'll be able to get some confluence with our targets to see where this can go. But 6,400, that's that level I'm looking at based on our large macro pattern off of our ABC that I've been showing you guys over and over again. So want to see if we hold this low. And it's key to understand whenever you get any type of decline, not just last summer, whenever you get any type of decline, you get a rebound, okay? Sharp decline, you get a rebound. You see it over and over again in the charts. And look at the corrections. This is another big correction that you did in the S&P. This was back in July 2023. It's one that we traded. This was an 11% drawdown, and you got the wave movements all the way through it. You formed a 5-wave fractal, right? So you ended up selling off. You sold off 6%, and then you rallied back up, almost challenging the all-time high again. You rallied back up 5%. You're going to get a reactive wave, a counter trend rally. Whether it's a dead cat or not, we have to see the wave form. But you see it over and over again, especially when the wave is this sharply down, you're going to typically get a sharper reaction wave like this. 11% down, sharp reaction wave back up, okay? That's what I'm looking at. Let's go ahead and look at Bitcoin, because Bitcoin, I know people are jumping up and down about Bitcoin. Bitcoin fell right to the 78, right? And it's bouncing off of it a little bit. I'm not suggesting to you that this is bullish. What I'm saying to you, if my thesis plays out and we end up getting a nice strong rally, what do you think Bitcoin's going to do? It's going to go back up, right? That's what it's doing. So it's important to hold this level because you need to hold that 78K low that you put in. The next level beneath you is 72,241. Okay. So if the markets continue to sell off tomorrow, you want to see Bitcoin hold the 77, 78K. If it does not, then you want to see it hold 72,250. Have my targets change? Remember, this is Fibonacci targets. It's based on expansion and contraction. So for Bitcoin, it has not. It has not really put in a new low, maybe marginally here, a few hundred points, but these targets remain the same. So my Bitcoin target on the rally back up is going to be 129 to 141. The same targets, guys. I've been calling it 130 to 142. Same targets unless we start seeing a more dramatic sell-off, okay? So we're going to be watching and see how this plays out. But right now you're holding support. Nothing to write home about. And you want to see this start chopping, building energy, and then exert that energy back to the upside. But it's not going to do it until the markets bottom and start to rally back up. You're going to see Bitcoin rally too. It could lead, it could lag, but this is really good that it's holding this level. And again, key pivot date coming up on Friday, total lunar eclipse. So let's continue to move forward. What about the NASDAQ? Looking at the NASDAQ, massive sell-off, guys. Massive sell-off today. Let me just pull this, get this number here. 881 points at the low. It's bouncing back up some. That's your 200 way up here, back at 20,462. You're at 19,424. You're in what Wall Street would call corrective territory, right? So you come down and look at this, 13.5% decline. Big decline. What is that summer decline that you did? People say that's it, tops in. You did a almost 17.5% decline. 3,600 points you shed, and then you still came up to make that all-time high, okay? The market's very catalyst-driven. We have a new inflation data coming out. We're going to see some things in the market. I don't know exactly which catalyst is going to trigger people to buy, but I'm telling you, this move has been done multiple times before, and regardless of whether you make a new all-time high or not, you're going to get a reactive rally, especially Cool to trade this if it ends up making the exact same fractal pattern all over again. But this is just all that first leg, guys. This is that first leg, and it hasn't even retraced yet as much as it did last summer. So wait and see mode on these assets, okay? You want to try to hold your low, obviously. Key low to hold was 19,228. You almost came down to it today. You got all the way down to 19,272. And then obviously these levels down here, these fractals, 18.4, which is substantially lower. I don't anticipate it getting to that level, but never say never. But you want to see the NASDAQ hold up, the most overvalued index in the marketplace, right? The NASDAQ lost $1 trillion today, $1 trillion. How's this affecting some of the altcoins? Look at Ethereum. Sold off below 2,000, broke down, got all the way down to $1,800. It's at 1859. Let's see where this is going. Let's take our fib and let's look at this, see what support level we can hold here. Need to get some fibs on here. And where is my 162? Right there. So we came just below 1880, which is at the 1272. 1618, if it was to continue to sell off, is 1613. That would be an important level to hold. Really important to try to hold where you're at right now, okay? I think everything is getting to the point where it's oversold, especially with the sentiment being as bearish it is. Doesn't mean it can't go down more. But just watch the levels, because these are key levels, especially if you're looking at rebounds, moves in the marketplace, because look at the sell-off. I mean, just in Ethereum, it's been absolutely massive when you look at the sell-off here. Where is my measurement tool? Here it is. Look at the sell-off from your peak up here back in December, 4109. I mean, it's down 56%, okay? It's important to watch these. I know some people probably own these, but look at Solana. Solana's down at the bottom of its trading range at 113. Huge move in Solana to come down this far. We got all the way up at 295 for that all-time high, and now you've come down almost 61%. Could it go down lower? Of course it could go down lower. Doesn't mean it will go down lower, because you're right at the bottom of that trading range, right around that 113, okay? So need to see the market's bottom and start to look at this. If Solana loses this trading range, then I would be looking at $90 Solana. You're at 119 right now. That's if it loses this trading range, starts getting a closes down here below 113, below this fractal, whatever that is. 108, what is that level here? That is 109. Start getting some closes below 109. You could be drifting down to 89. Important to watch. Important to watch. But when the market's bottom, it's also important to watch and see if you bottom down here, because the next move then would be to the upside if Bitcoin does its upside move. Let's look at XRP. XRP is holding up really well. Look at the defined trading range that we're in, right? $2.06. That's where you're at in XRP. You can see your fractal low down here is what? You want to try to hold this? $1.77. It's important to stay above that. Overall, going all the way back to December, obviously you had some higher prices, you've had some lower prices, but going all the way back to December, you've been basically in this trading range, okay? It's a little bit above, little bit below, but you've been in this trading range. You want to stay above $1.77, build more energy, and then you can look for some upside potential in XRP. What about the DAX? The DAX absolutely got crushed today. I think it was down over 700, 800 points. It's down 621 today, and it came right up to that level still. That 1.8 is 22,956. That's where it's really struggling. But again, even with that massive sell-off, you can still see it's still holding its higher low structure, right? Pivot low. All these are higher lows here in trend. Big sell-off, still a higher low, okay? Big sell-off. They're going to move with the U.S. markets. I'm still looking for 24,622. Doesn't mean you can't come down more. Doesn't mean you can't accumulate more. But I'm looking for that higher level still on the DAX. We look at the SPY. SPY came down to 555, right at the 786, bounced right off of it. And of course, you have the same W fractal off to the left here, okay? So we have the 786 bounced off of it. You're at 561 right now. End of the day bounce. You have your 200 above you. There's work to be done. But before you do that work, you're probably going to see a battle below the 200, right? That's important to watch. See how this plays out here at the 200. and you're getting volatility, guys, but the volatility will pass, okay? The volatility will pass, and in the SPY and in the triple Qs, you're going to get rebounds. What's that rebound look like on the SPY? Well, we don't know, again, if this is the low, but if it is the low, then we're looking at 591 for a rebound back up, and then I'm looking for same fractal I showed you guys on the S&P futures, something like this, come up to the 50%, come up to the 618, we don't know which, and then get some type of pullback, and then this move. Do we get a lower high, or do we get a new all-time high and come up to my 642 target, which is the target that I'm still looking for on the SPY? Let's look at the triple Qs. Big sell-off down to the 786. Again, same fractal pattern on all these indices, whether it's the futures or the ETFs, okay? So big sell-off, big move down, and the 200 is above you. Same thing here. Let's go ahead and pull a fib because you guys want to see these numbers. You want to hold 468, which is a 786. Pull this fib down, looking at that potential rebound at 513. If it's a 50% to 504, okay? The counter trend. And again, you can see how sharp it is. I mean, look at this on the Qs, guys. Just like straight down knife. I've never seen that before. You did it last summer, okay? And you're doing it again. So you want to see where this holds, and I'm expecting that. I'm expecting that next wave. Give us that W fractal. I think you'll get more of a V-shaped recovery potentially because of how stark this sell-off was. Again, doing something like this, right? That's what we're looking for. Will you make the lower high, or will you make the higher high, because I had that higher level up there at 559, all the way up to 600, depending what happens on the Qs, okay? So remember, liquidity is high, and the market will eventually get a rebound bounce, and that's what you need to pay attention to. Find that bottom. Where is it going to bottom? And then look for that next wave up. Let's finish this off with gold, because gold is retracing as well, and I think you're putting in a W fractal here as well. Not a big retracement, just 50% off this most recent little move right here, right? So again, if you're bearish, this is why there's two sides to the market. If you're bearish, you have a three-wave pattern. You have a double top, right? If you're bearish on gold, this is going to break down. Well, for that to happen, you got to take out 28.32, okay? If that doesn't happen, then what gold is going to do, which if it can hold these levels, it has a good potential to do this, in my opinion. If it holds this level or slightly lower between 28.60, 28.70, somewhere in here, hold something like this. When the markets get a counter trend rally, you're going to see gold try to rally with the markets. And I had that 3,043 level, even though we hit my 1618 perfectly at 29.47, right? Not a big retracement. So I have that 3,043 level, and that may be that marginal high, the psychological number of 3,000 that we need to cross to then get a bigger trade and see what happens in the marketplace. Because I think the bigger retracements, as you guys know, are yet to come. This is a run-of-the-mill retracement. On average, depending what stats you look at, every 24 to 30 months, you get a 10% retracement. So this is nothing unusual in the marketplace, and you're seeing it play out. And the key thing is, how do we recover? Where do we hold? How do we recover? Give me a follow at Market Canary on X. Hope you guys try out the Discord. I answer your comments and questions as always. Have a fantastic week. See you on the Thursday video on X. Take care, everybody.